back, but is it back for good? Welcome, everybody. I'm Neil Cavuto. The Dow back above 10,000 today. First time in a year. Now, that's not a huge feat, but considering where we were a year ago, a welcome one. Back then, remember, banks were buckling, the government bailing. Now, banks like J.P. Morgan are cruising, and Wall Street clearly likes what it is seeing. FBN Cheryl Casoni has been watching it all. Cheryl, what drove this today?
A lot of things, mainly the bank earnings. We had a really good report this morning from J.P. Morgan, and they said that basically over a $3 billion profit, excuse me, a $3.59 billion profit for that company. That helped, and also a good report from Intel. Remember, we need a few minutes to watch the numbers, but at this point, it looks like we are going to close and stay above that 10,000 level. We, though, were here before, remember, folks. We have sung this song before. We closed above 10,000 October 3rd, 2008. 7-month rally. A lot of that has been the banks. We hope that continues. There could be some landmines ahead for the markets, though, folks. You've got dollar hitting a fresh 14-month low today. Gold, though, if we've got lower dollar, you've got higher gold. Gold hitting a new record high today, and oil prices staying high as well. We need to see these earnings continue from a lot of these big corporate names. We are going to hear from more of the banks this week. That will determine what Thursday, tomorrow, and Friday look like for all of us. We're going to be hearing from Bank of America on Friday. We're going to hear from the behemoth in the banking industry, Goldman Sachs, tomorrow, and we're also going to be hearing from Citigroup. So we're not there yet, but above 10,000, Neil, as you know, a good psychological number for the folks at home to look at and to feel just a little bit better and get over where we were just 1 year ago.
Now, Cheryl, I've been catching on FBN as well as cashing in all the fine shows you're doing, and one of the arguments for sort of poo-pooing this rally is that the dollar's sinking and gold is soaring, as you pointed out, and normally stocks don't aggressively advance in that environment very long. They could sometimes do so for a significant amount of time, but they all kind of have to be in tandem. What do you make of that? You know,
one of the big worries I hear right now is about foreclosures, potential foreclosures picking up towards the end of the year, and also, remember, unemployment. We still have predictions, Neil. The economists tell you this, they tell me this on FBN, that unemployment's going to tick higher. If the economy begins to falter even further, or if it doesn't recover as the stock market is expecting, and that's what we're seeing today. The stock market's moving ahead 6 months saying things are going to get better. Right. If that doesn't happen, Neil, you know this very well, we could have a market sell-off again. So it's nice to see this today, but we've all got to kind of put it in perspective. Indeed, and you do. Cheryl Casoni, thank you very much, ma'am. Good seeing you. Yeah. Meanwhile, big banks are spurring this big rally today, as Cheryl pointed out. A year ago, remember, they were the ones behind the big meltdown, which is why former President George Bush was saying in South Korea early this morning his big bank bailout is to thank. So what was once the Bush recession is now the Bush recovery, or is that a bit of a stretch? Jim LeCamp says give credit where it's due. He is with Macro Portfolio Advisors. So, Jim, the former president saying, you know, those are tough choices back then. Critics of these rescues, myself included, didn't realize how close we were to the edge. He took the bold moves, and look where we are a year later. What do you think?
Look, Neil, it defies logic that you could blame Bush for the banking problems, the banking system, and criticize the bailouts and not give him a little bit of credit right now. Remember, a year ago, we had banks that were failing. We had money markets that were on the verge of breaking the $1 barrier, so you had a lot of panicky investors, and a lot of people were wiring money out of banks. You had a stealth run going on the banks, so they had to take very aggressive action very quickly. Now, between TARP and his appointment of Ben Bernanke, and he has dropped interest rates to zero, which has really helped these banks heal. He has helped on the recovery side of the banks. Now, I don't blame him for the banking problem. I don't give him all the credit for the recovery, but you can't blame him for the problem if you're not going to give him some credit for those moves that were made that are helping these banks start to recover.
Right, you're either a goat and always stay that way, or suddenly become a llama. I don't know, but